Welcome back to the Rose Bros podcast. This episode, we are joined by Rick Koshman, founder and managing director of BluMaple Capital, for another edition of the Rundle Eco-Capitalism Podcast Series, where the idea is to explore companies giving back to the environment while also making a profit. BluMaple is an investment fund currently in the process of raising $350 to $500 million to solve the funding gap that exists between small and large entities focused on low-carbon business models. Examples of companies that BluMaple is currently targeting include plastic recycling, solar and geothermal energy, biofuels, and lithium and hydrogen technologies. BluMaple aims to leverage its investment capital and owner-operator experience to help companies grow to their next stage, while also providing shareholders of BluMaple a profitable rate of return in exchange. We sat down for a smooth cup of Rose Bros coffee and discussed making a return in low-carbon investments, emerging technologies, shareholder alignment, funding gaps in the marketplace, and a lot more. Enjoy! Also, this week's podcast is brought to you by A1 Media. Looking to grow your business online? A1 can help grow your business through its bundled media packages, including a website, newsletter, social media accounts, e-commerce storefront, or podcast. Let A1 help tell your entrepreneurial story and reach millions of new customers. Check out a1dev.ca today for more details on how you can grow your business. Also, looking to learn more about everything from healthcare to the outdoors, investing, and local news? Check out the Rose Bros newsletter. The Rose Bros newsletter is sent twice a week and is packed with interesting articles, new podcast episodes, book recommendations, pictures, quotes, and tweets. Head over to rosebros.ca today and learn more. You won't regret it. Well, why don't we start?
Let's go for it.
I really appreciate your time. You are the co-founder and one of three managing directors of BluMaple Capital. What is BluMaple Capital?
Yeah, well, first, thanks for having me on this podcast. I've listened to several of them. They're really interesting. So BluMaple Capital, I would say we are a hybrid between venture capital and private equity. And we're specifically focused on making investments within the low carbon innovation space here in Canada. When you start a company, you need to think about what problem are you trying to solve? And further is, why are you the company that should be solving it? So in our case, we looked at the landscape and we saw that there's a funding gap. Very specifically here in Canada, this funding gap exists between, I'd call it incubation and large-scale companies. And so you catch this in the news. There's a lot of headlines around how frothy it is in the incubation space, and that's great. It's a very vibrant sector across each of the provinces here in Canada. We have this workforce which is just so geared towards being entrepreneurial and innovative, and they're really active. So there's entrepreneurs that are very, very active in this frothy type of incubation scene, and they can get access to friends and family money. They can get access to some of the program monies that are for the incubation programs. And then at the other end of the barbell, you have companies that are very large in scale, ESG centric, and there's a lot of competition for those assets. And so you have the real big companies like Brookfield and KKR and the large strategics that are competing for those assets. And then in between, you have a little bit of a gap. And so it's very difficult for these companies coming out of the incubation scene to get that $20 to $50 million injection that is required to grow an industrial type of operation. And I should clarify is that BluMaple is predominantly focused on industrial applications that are related to the low carbon industry.
In layman's terms, you guys are a fund that's been raised to support the intermediate size company between venture and large in the ESG space?
Yeah, it's a lower mid-market, I would call it. It's a lot of companies that are just on the verge of building out their commercial operations. So Innovation Canada, for instance, they have a 9-scale evaluation. So it's called the technology readiness level. At the lowest end of the spectrum, at 1, it's an idea on a drawing board. And at number 9, it's when companies have a technology ready for commercial deployment. And there's a gradient across that. So we're predominantly focused on investing in early stage companies that have a technology that is at least at technology readiness level 7, but we're typically targeting 9. And many times it'll be a technology that's graduating through the process. They're de-risking it as they go along to try and solve a problem that already exists. Or it can be a technology that's already off the shelf. It's being used elsewhere, and it's just being repurposed to take on related to energy transition.
How much money are we talking? How big is the fund?
Well, we're early stage, so we've just started our fund, and we have essentially 2 product lines that we're going down. So we are raising an overall fund, $350 to $500 million Canadian, and this is to make between 10 and 13 placements the size of $20 to $50 million each. But we also, because raising a fund does take a fair amount of time, in the interim, we're going to be doing what's called SPVs, so special purpose vehicles, and these will be single investment funds, call it mini funds, where the investors will get the full access to our team as far as actually, like our big upside here, and I didn't answer this. The second part of my question is, why should we be the ones looking into this? Why should we be the company that's taking on this funding gap? And across our backgrounds of the team is we are owner-operators. We have, throughout our careers, we've managed growth and complexity. And so we really feel that we're well-positioned to one source, because our origination is quite a bit different than I'd say other shops, because, again, those owner-operator backgrounds, roots, the network that's associated with that. But I think we're also uniquely qualified because we've touched this deal, to be able to go out and look at these companies, to talk to the entrepreneurs, and to be able to help them roll up our sleeves as either significant minority investors or even into a majority position, to get quite involved with their operations, usually at their request. This is a pull, not a push. And so when I mentioned that an SPV or the fund, that you get full access to the team's efforts, is that we'll manage it the same. And so we'll make some placements underneath SPVs, and once we really get rolling, we'll be making placements underneath our fund.
How much money of your own have you had to put in so far?
Well, yeah, it's this isn't for the faint of heart, and so not getting into particular numbers, but I would say that Jeff, Rob, and I, as the main owners of the business, is we have full skin in the game. As we like to joke about, is that we've burned the ships. So it's we'll be investing alongside our investors as one, but of course we're fully funding the GP as well.
You're eating your own cooking.
Yeah, that would be one way to put it. Yeah.
Warren Buffett would say. Yeah. How does BluMaple plan to make money for not only yourself, but also shareholders?
Yeah, well, they're one and the same, really. Essentially, we're investing alongside our shareholders. And so having a pretty standard, call it private equity model, it's, there's some metrics that are out there that are pretty standard as far as carry and management fees. So that's how BluMaple will make its income, is through the management fee, to allow us to dive deep with these companies, to steward to our investments the whole way through. But when we look at the investments, because that's more the focus, because that's really why investors will invest into us, is seeing the long-term arc here. So low carbon innovators, it's a very interesting space right now. It's for us, we have this unique access. So to give an example, in the last 6 months of last year, we screened more than 20 companies. And we were the only ones at the table at many of those companies. And one that highlights that there's a gap. It was across 5 provinces. We have 3 focus areas, fuels, infrastructure, and renewables. What's interesting is that the companies that are coming to bear is, again, focusing on that technology readiness level of 7 and above. There are some very cool companies out there. And I mean companies that I like to describe them as engineer meets farmer. And I say farmer here in the most endearing terms, is like very practical, is they are not looking to invent something and then going out and looking for a problem to solve. There's problems out there to be solved, and they're taking it on. And so we're dealing with real companies. And so how we would look to grow these companies and grow our investments in them and have them increase in value is These companies, when we buy in, they're going to be early stage, and they're typically going to be at their first plant deployment because these are industrial in nature. And so they either have an operating pilot or a commercial pilot, and they're looking to build out their operations. So one is our investment in the early stage. So we're an early mover. We're predominantly doing equity investments, and we invest in the early cycle. And then you have the growth that comes between, call it that pre-build and post-build multiple. Then further to that, many of these companies have intellectual property, IP. Their ability to grow might actually be beyond what they themselves will be doing. And so they'll be able to get into joint ventures. They'll be able to actually grow in other regions. And so we will assess all of that. Every ecosystem needs to have exits. And that's a big part of our model here, is that we feel that the environment is now ripe for investment exits. So it could be buybacks from the actual companies we're investing in, where we've been able to grow them along an arc, and now they no longer need us, so they'd like to buy back. That could be one route. Another one is strategic, so larger companies that would love to have one of these companies be a bolt-on to their existing operations. And third, and this isn't certainly an extensive list, or I'm not going through all of them, but third would be IPOs, would be one of the routes that these companies could go, but also the larger funds. As I mentioned, that barbell effect. And so if we're taking in a company and accelerating it through that middle gap and getting it to the other end of it, there's quite a few companies that will be willing to take on these, what will be substantial companies at that point, which have an ESG focus, which are in the low carbon space.
How does BluMaple measure performance when speaking to shareholders? Is it relative to the S&P 500? Is it to other venture funds? Is it to a low-yield bond?
Yeah, we're very open with our shareholders about what our thresholds are for how we screen projects. And so we are looking for VC/private equity return levels. And so on every company that we are looking into in screening, we will do a full top to bottom corporate model on them. And corporate models are interesting, is that the company that is trying to sell equity in their company is they'll provide a model. You need to screen it to make sure it's of a good quality, that there's no errors, just standard things like that. But it really, your judgment comes to bear when you're looking at the assumptions in the model. And our owner-operator backgrounds really help us out on this front. So we plug in our assumptions, how long it'll take to build out, the pricing of the product, the growth of their commercial model. We'll embed some risks into it. And at the end of the day, if it doesn't meet our internal threshold for an investment, which is of a significant amount, is we will not place an investment. It's not a personal thing. It is just simply that we will be looking at these assets top to bottom and making an informed decision if we make a placement.
For the average investor out there who might be thinking about this space, if you were to tell them on an annual basis, what would that equate to in terms of rate of return, maybe 20, 30% over 3 or 4 years?
Yeah, I would say broadly in this space, and when you're looking at venture capital, private equity, is that we're going to have a threshold of screening at 20%. And so it's if we don't have a line of sight to a 20% return, is we won't make the placement. Now, if you think about it, is that model that I described is we'll invariably be wrong on our assumptions. Sometimes we'll undershoot, sometimes we'll overshoot, but we'll do it in earnest. We'll make decisions on the best information of the day. But at the end of it, some are going to vastly outperform, we hope, and some might not. And the good thing about the types of companies that we'll be investing in, though, different than a standard, say, high-tech VC model, is their industrial nature. Typically, the growing pains they'll have as they build out, every company has them, of course, but the growing pains we don't think will include the type of companies we'll invest in to have fatal flaws. So we're not looking at binary outcomes of zeros. It might happen, but typically it would be our assumptions were maybe we overshot or something had moved after we made the investment, and we get a less than optimal outcome, but it's not as binary as ones and zeros as you move forward, at least with our investment thesis.
Would you view it along the lines of the tech venture capital odds of success, like 1 in 10?
Yeah, I would say tech venture capital is quite a bit different than what we're looking at. And so in that space, and I'm certainly not an expert in it, but I do understand that they go unicorn hunting.
Yeah, exactly.
So they're really trying to have dramatic outsized returns. For instance, if an analyst had Facebook from the earliest days in his portfolio of companies, nobody cares what the other companies were because he had a unicorn, he or she. Yeah, and in our case, there'll be some very good grounded companies that are solving real issues that we'll invest in. Will they be unicornian in nature? That's probably a stretch, but these are going to be really good companies. Now, the other side is that the risk profile that comes with that is quite a bit different. We're again bootstrapping owner-operator types. We will give our best efforts on the screening of the company, and we'll usually have a pretty good line of sight of how it will turn out.
Have you found it difficult to find companies of substance in the ESG space? It seems like there's a lot of money chasing that style of company, but sometimes it's hard to find substance.
Oh, I would say that our origination has produced some fantastic companies of, I would say, quite a bit of substance. It could be a company that is very active in the lithium space, either from a mining extraction point of view. It could be a company that is looking at logistics of recycling and upgrading our products where they already have a commercial model built out. They're already selling to real customers, and they're just looking for this injection of, call it industrial funds or institutional funds, I should say, to grow to the next level. So these are real companies going to the next level. And perhaps our view of the world is slightly skewed in this VC private equity space because we're targeting industrials. So these are, again, bricks and mortar type of companies solving real problems.
So there isn't a big problem when you're looking at companies in terms of determining whether they're actually giving back to the environment, or they just say they are?
No, it would be more than that. I would say one is just taking a look at the base technology that they're looking to progress. For instance, we are not looking at companies that are typically making the oil and gas operations more effective and lower carbon intensive. I think that's actually a fantastic initiative. We just feel ourselves that there's already strategics that are focused on that, are well capitalized. They have their large and very capable engineering teams that are taking it on. No, on our front, we're looking at companies that, again, would be right in the fairway of what would be called low carbon innovations. And so to give an example is we've looked at companies that have the next gen of solar panels. And this would be for deployment for commercial and a little bit into a residential space as well. We've looked at companies that are upscaling essentially waste. And so it could be waste of multiple different types. There's 2 different companies that we've screened in that basis. We've seen interesting companies that have the next gen of low carbon concrete. And so by their descriptions alone, hopefully they give the impression we drive further into it, that we feel on an environmental aspect is that they're right in the fairway. As far as the S and the G, our screening would, I would say at a high level, is that many of these companies are early stage. They're typically owner-operator types themselves, maybe on their second or third company as an entrepreneur. And they have a small team, and they focused on the technology, and they focused on the solution they're trying to get to. As far as the S&G, when you get into social and governance, is as long as they're willing to continue to grow into that space, that will be one of the aspects where we can provide a lot of coaching. We have a member of our team that's solely focused on keeping on top of the latest and greatest in that space, and we'll be providing coaching and guidance as we go along. A company that is steadfast opposed to any of those clearly gets screened out.
Do you ever worry that a company you find may ultimately have a worse effect on the environment than you originally thought? And although they market themselves well and it all looks shiny and nice, at the end of the day, they're not really helping the environment at all, kind of like the lithium mining or something along those lines?
Yeah, and so lithium in that respect, I'm trying to make sure that I'm keeping it high level to protect the innocent, as in the companies we've been talking to, as we're not under CA or anything as such. But in that case, it's a company that extracts lithium out of water wells, and they're really going in a great direction as far as being able to feed the electrification of our economy is going to require lithium, until there's massive technology changes. And so in my mind, on an example like that, is that at least in the next generation of technology, is they're going to be providing a tremendous benefit if we invest in them or not. Other type of companies that we're looking in that are doing, say, carbon capture at source, and then creating other products in that out of it, or going to sequestration. Yeah, I feel that it's undeniable of what they're doing is going to be in a positive direction. One is to bring more dollars into Canada, to invest into companies to show that we are responsible here and that we're taking it serious. I think the oil and gas industry, by the way, is not getting the credit they deserve in that front here in Canada, specifically, having experience abroad and knowing that it's different elsewhere. But yeah, as far as our screening, we'll screen with our best efforts at the time and use all the information we have at hand. We'll do market research, get a sense of the type of product that the company we're investing in, what they're pursuing, what are the short, mid, and long-term implications, and we'll screen on that basis. And so is there a fear in there that we might miss it? Yeah, I suppose there could be, but we can only control what's right in front of us as far as the information we have on hand.
If, like we were saying, the average retail investor came to you and invested their money with the fund, how do you explain to them your plans on mitigating risk on getting your investments out? Because it's not, in this case, you're not investing in public markets where it's easy to get the money out. What's the plan to mitigate the risk on the back end of the deals that you guys do?
Yeah, so one, to be clear, is we're not actually selling to retail investors. And so this is accredited investors and predominantly institutionals and pension funds and the like, strategics as well. So regarding the question of being able to take your money out and liquidity that's associated with that, yeah, it's with private equity in general, it is a lockup. So we are a 10-year fund, for instance. For the first 5 years of the fund, essentially how it works is that an investor will stress or make a commitment to the fund. And then as we find projects within the first 5 years of the fund, we'll do a cash call of a project that fits our mandate, fits our thresholds, it's passed the screening, and we do that up to the 5-year mark. For the next 5 years, we'll be looking at continuing to grow those companies and then looking at exits. It's a reasonably long fund from the perspective of 10 years. If you were to rewind maybe 5 years ago, funds may have been 7 or 8 years in duration. But the type of investors that are going to be attracted to invest into BluMaple will understand that that's the time horizon. And as far as the extraction out, not getting too far into the weeds, but the investors get paid before BluMaple gets paid. From a waterfall perspective, they would get all of their money back. They would then receive a hurdle. And then only after that's cleared do we get into the sharing of what is called carry, so the upside of the businesses. So we're extremely well aligned in our motivations to get to the carry, but we are also extremely well aligned as we will also be investors. And I know we're talking quite a bit about returns and what have you, but maybe to take one step back is our team that has come together on this, including our advisory board, which are all notable in their own right. They've had successful careers as owner-operators. Is taking on BluMaple is not it's not all financially motivated. If you take a step back and you look at Canada in general, we've been a resource developer for 100 years. Our institutions, our training schools, our associations, our regulatory bodies are all geared to enable that resource sector. And as a byproduct of that, we've created this unbelievable workforce. I was an expat for 5 years, and the percentage of Canadians halfway around the world working on interesting problems, in my case in Kazakhstan, it's disproportionate to other nationalities. And that's for a reason, is that we've generated a phenomenal workforce. And here we are at what is probably the largest challenge that humanity is facing in modern times. And we have, in Canadian terms, this fantastic can-do workforce that maybe it's innovation comes out of more than just being resource-based. Maybe it comes because we're spread out far from each other in Canada. It's a dispersed society. We live in extreme conditions. We have to be innovative, right? We have been for generations. And so it's this opportunity to be part of enabling that workforce to help Canada secure its renaissance in this space. It's not to take away from any of the other industries. This is going to be another leg to the energy story in Canada. And I just feel we're so well enabled to do that. And that's really the big driver for the team. And so if we can do that and we can generate good returns for our investors and therefore make it commercial for ourselves, all the better.
I think what BluMaple is doing is really cool, but the critic might say that ESG is very murky and that it's hard to prove what is ESG and how you plan to make a return on that. What would the response be to that?
I would say that I have this interesting access. I was a long-term member and I was on the board of the Canadian Energy Executive Association. And so I come from the oil and gas side, 100%. And a lot of my network, a lot of my closest friends, they're strong incumbents. And I tell you, they all want to do the right thing.
Exactly.
It's they are all pushing in a positive direction. And even to take one step further out is that I think people looking into our industry sometimes look at it with an angle that they feel that there's an ideology behind oil and gas executives, like we just need to produce oil and gas. Maybe there's some of that. But I would say it's predominantly that we're industrialists, across this vast group of talented executives and workers and engineers in this space. We're industrialists. So there's an abundant resource that has been brought to market, and they've been able to focus on doing that really well. When it comes to the type of projects that BluMaple will be investing in, I think where the real value will come in, and this is where strategics are at the table talking to us about investing, is it gives them an interesting angle, is that, for instance, investing in BluMaple is they'll have early access to evolving technologies is one. They'll have early access to these technologies not only from the perspective of an investment, but to be able to apply them across their own operations. Again, talking about these solar panels or talking into carbon capture. These are tools and processes that could be applied to the existing operations that could help out here. And I think when you see how tangible that can be, I do believe it actually becomes less murky.
Because you're an engineer. You have the technical chops, I guess, to back it up.
Well, again, going into this front is that it's, in my case, of course, I have an engineering background and I've delivered a lot of projects. But looking at technology from the perspective of are they solving an existing problem?
Exactly.
Is a different lens than going, oh, that's a cool trinket. Let's go see if we can find a problem to solve. Mm-hmm. And so the companies we're looking at, and they're in abundance in Canada. We have this fantastic enabled workforce that is taking on innovation in the low carbon space, and they're coming up with great solutions to existing problems. And yeah, again, I don't think that's that murky.
What's been the biggest challenge for BluMaple so far?
Well, raising a fund and screening investcos, like potential companies invest in a COVID context, has not been exceptionally fun. It has had its upsides. It saves us on travel. We can talk to New York, London, and Toronto all in one day. But it's a body contact sport. And so it's really great to get out and meet with companies you're going to invest with in person. Equally so, it's a body contact sport when talking with potential investors into your fund. And so that's been a pretty big challenge. But we're still very optimistic of the outcomes of what's in front of us.
What would be the biggest opportunity for BluMaple going forward?
I would say the biggest opportunity for us is to continue down our path and to be enabled to do so, to land those anchor investors into our funds that would see the value in what we're bringing. As far as actually finding the investments, we're extremely confident on that front in our ability to screen them. We've added to our team, and we've been adding to our team for the last several months, and we'll continue to do so. And so the talent that is willing to join us and on this journey is phenomenal. So I'm not worried about those fronts. But private equity space is difficult to crack into. And when you overlay COVID on top of that, that ends up being a little tough.
Is there a particular technology you're more excited about than others? For instance, say carbon capture or carbon credits or solar?
Yeah, you know what? We have the three branches that we're looking at. One thing that is underpinning all of it is they're all industrial of nature, right? So they're you can touch it, feel it, you can understand it, and I would say the three of us, so Jeff, Rob, and myself, we all kind of have our little pet directions that we like. Or it's not pet projects, but our focus areas that we probably lobby for a little bit more than others. And in my case, of course, it's coming from the oil and gas and midstream sectors. I really like the products that I can understand that are related to those fronts. And that could be interesting acquisition targets in the future for those type of strategics. And I would say, yeah, Rob, coming out of Terita, he has a specific lens of the world. And Jeff is a purist in this space. So he was one of the co-founders of Blue Earth Renewables. And right from the very get-go and selling out to a private entity from $0 to $1 billion in a 4.5-year period, they were able to build a bunch of different projects that were very interesting. And so he of course has his angles of things that he's interested in. So we're trying not to get too passionate about one specific area. We have our three tranches of fuels, infrastructure, and renewables or recycling. And I would say that it's just we're a little bit technology agnostic, but we need to see that there's a practical solution to an existing problem.
BluMaple would be an example of eco-capitalism, perhaps similar to companies like Rundle Eco-Services or Titan Clean Energy Projects, Polyag Recycling. Shout out to those guys where the goal is to make money and give back to the environment.
Yeah, those are great companies, by the way. I listen to those podcasts. I'm looking forward to meeting them in person. But long as eco-capitalism doesn't suggest that there's less returns that are available. We are doing this, I hope, for the right reasons, but I also don't think we've been in a position where we have to compromise the upside of our investments because of that. And so if that meets the definition, then yes, I agree.
Well, that's awesome. I think that's a pretty good place to leave it.
Well, I think this has been really good, and really appreciate you having me on.
Thank you for doing this. And if people want to learn more about BluMaple, where can they find information about the company?
Yeah, I believe you include show notes right on your site. So it's if you put a link to our website on there, that'd be great. But it's BluMapleCapital.com, and blue is not spelt with an E. It's BLU, maplecapital.com. And we can receive notes off of our website. That would be great. Look forward to inbounds.
Awesome. Thank you. I really appreciate it. Hey, thanks for listening, everyone. Hopefully you enjoyed the episode. If you liked what you heard, check out roadsbros.ca, where we will have upcoming shows. Until next time, happy coffee drinking.